Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us in studio, we have Jay Gragnani, Head of Client Engagement at Research with Nasdaq Dorsey, Wright. Jay, it is great to see you in person, back in studio at our home in Times Square, New York City.
It is great to be here. I think this is the first time back in about a year and a half. So it's great to be here.
Yes, you were one of the last people that I interviewed before we all had to learn how to operate virtually starting in March. All right, let's talk about some long-term trends and where you're seeing leadership in the market.
Yeah, not much has happened since we were last in person, has it? The past year and a half.
Market only doubled in
No, but you look at this year and coming off of last year, the extremely volatile year, you haven't seen a whole lot of downside volatility in the market. And when you just kind of take a step back, and one of the things that we do is look not only at relative strength leadership of the market, but also look at how are individual stocks trending. You look on the surface, and U.S. equities since last summer have been ranked #1 and continue to be ranked #1. So that's where we continue to see our focus. Additionally, you see a vast majority of individual stocks in positive trends. About 80% of the S&P 500 today, those stocks are trading in positive trends. And when you combine those two things together, generally on the surface, we continue to see long-term positive trends for the market. We continue to see long-term leadership trends for the market. With that said, there certainly have been some sector rotation happening underneath the surface over the course of the year, as well as leadership changes that we're keeping an eye on as we move forward.
Let's talk about the seasonal period that we're in. August and September, particularly September, have known to be historically volatile months. And it feels like for this September, it hasn't been that volatile. It's more choppy to sideways, if anything else.
It has been. I mean, yeah, September historically is the worst month for the market. It averages about a 1% loss. So nothing major, but certainly it is the period of the year where the September and October period are historically generally weak as we're rounding out the end of the seasonally weak 6-month stretch in the market. That being from May through the end of October, that being that period of sell in May and go away mantra. But no, you've seen a little bit of volatility come back into the market after the market hit new highs at the beginning of September. You've seen things pull back a little bit, but ever since then, you're right, it has been sideways. What's been interesting, though, is to watch some individual sectors underneath the surface that have been seeing some near-term weakness. Specifically, you look at some of the sectors that had initially benefited from the reopening economy, things like airlines and things like a lot of the autos. The autos have been certainly one of the areas that have been hardest impacted by the chip shortage. You're starting to see some deterioration from a trend perspective there. So that's one of the areas that we're watching really, really closely in terms of the weakness that we're seeing out of those two areas specifically.
Let's talk about commodities. We saw a little bit of strength in crude, even natural gas, but it's interesting to see what's happening with lumber. I mean, we talk about supply chain shortages and what's happening with housing prices all the time.
Yeah, I mean, last year I remember seeing pictures of home improvement stores where the entire lumber section was empty. I mean, lumber prices just exploded even into the beginning of this year. But since April, they're down about 66% off their peak. And meanwhile, you saw crude pull back a little bit, but crude has regained its strength. Crude oil has moved back up above $72 a barrel. So even within the commodity markets, within what's going on there, really you're seeing strength within energy. Perhaps it's from the reopening economy as more energy consumption is being had. Not only crude oil, but natural gas. Natural gas has exploded here recently as well. So a lot of interesting developments happening within the commodity market as well as the U.S. equity market. I think it's also worth noting this year in equities, I mentioned some of the sector rotation, but really earlier this year, technology and growth kind of lagged a bit in the first quarter. Those two areas have really come back on, and those are the areas that have really carried the market to new highs. The S&P 500 is about 25% technology. That certainly benefited. The Nasdaq 100, certainly a major weight in technology and large cap growth. That area has really carried those indexes up to new highs here recently.
All right, Jay. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.